Welcome to Staffworks Explained. If you are here for the first time, please consider subscribing to this channel. In this video, we'll be talking about DR Congo stock exchange plans, where we say it signals a new chapter for the Central Africa's financial market. The Democratic Republic of Congo, a country that sits at the heart of the global race for critical minerals, is preparing to take a significant step beyond mining. The government plans to establish the country's first stock exchange, marking a milestone in the evolution of one of Africa's largest yet least developed financial systems. Finance Minister of that country says that the exchange could begin operations next year, 2027, with securities traded both in Congo francs as well as in US dollars. The initiative is intended to broaden access to investment capital, strengthen domestic financial markets, and reduce the country's dependence on traditional sources of financing. It comes as demand for copper, cobalt, as well as other minerals used in artificial intelligence, infrastructure, electric vehicles, as well as renewable energy technologies continue to rise. For decades, the DRC has attracted billions of dollars in mining investment without having a domestic capital markets facility capable of mobilizing local savings or allowing companies to raise funds through public share offerings. The planned exchange seeks to alter that. The proposal also follows recent efforts to modernize the country's financial architecture. In June, the government signed a partnership with the International Finance Corporation (IFC) to help establish the Kinshasa Stock Exchange, develop the regulatory framework, as well as build a market infrastructure and support the exchange during its formative years. Draft law creating the country's capital market framework has already advanced through key stages in the legislative process. Within the East African Community (EAC), capital market development varies widely. Kenya remains the regional most mature market. Nairobi Security Exchange has operated since the 1950s and hosts dozens of listed companies, spanning banking, telecommunication, manufacturing, agriculture, as well as real estate. It also offers government and corporate bonds, EFTs, the Real Estate Investment Trust, making it one of Africa's deepest and most diversified capital markets. Tanzania has steadily expanded the Dar es Salaam Stock Exchange, with listing from banking, telecommunication, mining, industrial companies, among others. While smaller than Kenya market, it has become an increasingly important source of long-term financing for domestic businesses. Uganda's Security Exchange continues to grow, although trading volumes remain relatively modest. Several of the country's largest companies, including banks and utilities, are listed alongside government securities that dominate trading activity. Rwanda has developed one of the region's most modern regulatory environments. Despite having a relatively small exchange, Rwanda's stock exchange has attracted both domestic listings and cross-listings from companies already quoted in neighboring markets, reflecting Kigali's ambition to position itself as a regional financial center. Burundi operates a small security exchange that focuses primarily on government debt, while South Sudan has yet to establish a functioning stock exchange. Regional integration has also gathered pace. Kenya, Uganda, Tanzania, Rwanda have worked to harmonize regulations, facilitate cross-border investment, and improve market connectivity. In 2025, the East African Security Exchange Association launched the East African Exchange 20 Share Index, providing investors with a benchmark covering leading listed companies across the region. Ethiopia offers perhaps the closest comparison to DRC. Despite being one of Africa's largest economies, Ethiopia operated without a modern stock exchange for decades. That changed in January 2025 with the launch of the Ethiopia Security Exchange (ESX), part of the wider economic reforms designed to liberalize the financial sector and mobilize private investment. The exchange remains in its infancy, trading activity is still limited. The number of listed companies is relatively small. However, the legal framework, independent regulator, and market infrastructure are now in place, creating the foundation for future growth. Authorities expect additional listings from banks, insurance firms, private companies, as well as eventual state-owned enterprises as reforms continue. The DRC authorities are likely to follow a similar path, establishing the legal and regulatory institutions first, building investor confidence, and gradually attracting listing rather than expecting a fully developed market from the outset. Creating a stock exchange is about much more than buying and selling. For the DRC, it could provide domestic companies with an alternative to bank lending, encourage greater transparency through listing requirements, and improve corporate governance. It may also create new investment opportunities for pension funds, insurance companies, as well as individuals investors who currently have few domestic options. The exchange could eventually support companies beyond mining, including agriculture, telecommunication, manufacturing, financial services, as well as infrastructure. That diversification will be important for an economy that remains heavily dependent on commodity exports. The use of both Congolese franc and US dollar also reflect the realities of the country's highly dollarized economy, allowing issuers as well as investors greater flexibility while potentially attracting both domestic and international participation. What does this mean for the region? The significance extends beyond the DRC borders. The DRC is now the largest economy in East African community, that is in terms of land area, and among its most productive in terms of resources. A functioning capital market would strengthen regional financial integration by creating another destination for cross-border investment and potentially allowing companies to pursue dual listing with exchanges in Kenya, Uganda, Tanzania, and Rwanda. Greater financial integration could also improve the mobilization of capital for regional infrastructure, energy, transport projects that support trade across East and Central Africa. For investors, the addition of Congolese exchange would expand opportunities into one of the world's most strategically important mining jurisdictions, particularly the global demand for critical minerals as it continues to increase. Launching the stock exchange is only the first step. Experience across Africa shows that successful capital markets require strong regulations, credible institutions, consistent disclosure standards, and pipeline of companies willing to list. Liquidity is often the biggest challenge for newer exchanges, particularly where institutional investment remain unlimited. DRC will also need to strengthen investor confidence by improving the broader business environment, ensuring regulatory certainty, and maintaining macroeconomic stability. Building a local participation will be just as important as attracting foreign capital. If these conditions are met, the country's stock market could evolve from a symbolic institution into a meaningful engine of economic development. For a nation that has long supplied the minerals powering the world industries while remaining largely absent from the global financial markets, the planned exchange represents more than a new trading platform. It signals an ambition to capture greater value from its own economy, deepen domestic investment, and take its place alongside the African nations building modern capital markets. The process will take time, but if supported by sound regulations and sustained political commitment, it could reshape not only DRC financial landscape, but also strengthen the integration of capital markets across East and Central Africa. So thank you for reaching this far. If you are here for the first time, please consider subscribing to this channel. You can also leave your comment, like, and share. So thank you, and let's meet in the next one.